Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 19th of May here in 2022. Let's start by talking about the edge of that expected move in the SPX. That's right there, 3890. On the daily chart, it comes with the lows, which is new lows right here in 2022. But if we pull this down to an intraday chart, even the 1 minute chart, that is a gravity magnet point if there ever was one. 3890, the edge of the expected move, has been the low many times in today's session. Key is going to be, will this level hold as support and funds buy and the market bounces and we have a saved edge of the cliff, or will we crash on through, which could lead to another big down day on Friday or even into next week. So that'll be the theme. Will support hold or break? In the bigger picture, we do see the downtrend continuing in the SPX and in the broader market, which is these lower lows and lower highs. Taking a look at the uptrend, with the downtrend, lower low, lower high, lower low, all the way up here, lower low, lower high, lower low. And that does put a downward trend on the prices. In the Nasdaq, it is a little bit clearer because that downtrend started a little bit earlier. Tech stocks are the ones under pressure from higher interest rates, and that is the theme. Inflation and higher rates have occurred very quickly, and the market is repricing that very quickly. We just saw two other examples of that with Walmart and with Target. We'll take a quick look at those before we get back to the Nasdaq. There is Walmart, 3 days in a row after its earnings miss. And of course, it talked about inflation and pricing, as did Target, which had its own breakdown as well. But in today's session, we had earnings from Cisco. Well, one of the headline was they didn't really have a plan to deal with the economic shutdown. It is a little bit late for that, but unless if they want to use that as a defense or why the stock is underperforming, nonetheless, that is a downward move in Cisco shares just on the back of Walmart and Target and others. Back to the Nasdaq. These stocks were on the forefront. So technology sector stocks in general, the peak was actually into November, where the S&P had its high over here earlier in the year. And the Nasdaq has been on a much stronger or more persistent downtrend. And from the high 17,000 down to about 12,000, in terms of percent change, that's the biggest percent drop, which is roughly speaking about, we'll take a look at that here, it's about a 31%, 32% decline from the peak to the prior low. And the Dow mini futures as well, 31,000 is your key level for the Dow. And the Russell, it's 1700 in the Russell. Now let's go to a little broader perspective, which gives a little more clarity, and we'll start with the S&P. This week did hold the expected move, and it held that prior low, especially overnight in the future session. But will it hold? And if it doesn't, where is the next target? We are already in that drop zone and are already moving down from the 4150 and 4100. And of course, these levels breaking do suggest we may see additional downside action in the broader market. On the weekly chart, that does take us down to prior highs at about 3,500. And the Nasdaq has already broken those prior highs or prior lows. And that's taken the share price or the index price down again to about 12,000 and potentially under that. Lower support would include about the 11,000 and beneath that. And again, if we think that's not necessarily possible, some of the leading tech stocks have already gone down further than the Nasdaq as well. And we can look at Netflix just as the two of the ones that have fallen the most, just in terms of stocks that used to be larger, much larger market cap. Also, as we look at tech stocks, there is Amazon. Again, focus on the daily chart here with key support levels. That's about 2,000 for Amazon before it does its split adjust. And on the weekly chart there, it is back down to 2,000 from 3,800. Google or Alphabet similarly is at a prior support level, and that's actually the downside target to about 2,200. That's right there in Google shares. Where is it on the weekly chart? Not a huge decline relative to the rally. Google was on the leading edge and showed relative strength to some of the other tech names, but it as well is taking a downward move in 2022. And we'll discuss Apple, which has shown relative strength relative strength means it's not as far as the other ones. It is still going down, and Apple shares similarly peaked at the beginning of the year, not quite when the Nasdaq did, but its share price, Apple, is down about 24%. That is where the market is as it pushes to new 52-week lows. And the other indices, there's the Dow Mini Futures, target level about 29,000. And the Russell has its target achieved right here into 1,700. Now, this is the split market today with the consumer staples session, again, on the leading edge of sell-side activity, right there with the technology sector. We can see that here within Google. We look at Microsoft, Apple, and of course, consumer staples. We also had weakness in industrials, which are over here. And other stocks, other names were on the downside, but there were pockets, small pockets of strength, but pockets nonetheless. There were a few of the retail sector names and material. So a little split market today, despite being down over 0.5%, or at some points was positive in the session. The leading sell side was in the Dow. The Dow was the weakest, and the Russell was the strongest in today's session, at the close at least. Now, which stocks are making those new 52-week lows? We'll take a look at that and scan. We'll actually start with any stocks making new 52-week highs in the S&P. Only one, NRG Energy, and that is a small, relative speaking, market cap name. So which ones are making 52-week lows? We'll scan those in as well. Many more. Just about 70 stocks here are making 52-week lows, and you know some of the names. I always sort these lists for stock scans by market cap, and the reason being, those where I want to position trades or at least be monitoring for leadership or laggardship, which stocks are outperforming or underperforming, and where might positions be. So Walmart, Bank of America, Oracle, Cisco, we just saw its earnings break, Accenture, Intel, UPS, and down some other financial companies. It's split across different sectors, but there is Target, which had its new lows. So again, looking at this quickly, we won't even look at the stock making a new high, but going down the list, remember the weekly chart is here, the daily chart is there. There is Walmart that has tumbled down, and we'll actually go behind it and talk about Target in a similar situation. But then a few financial companies, including Bank of America. We'll look at other stocks. We'll include Oracle. We won't just go down financial stocks. Oracle, there is Cisco, and then Accenture, Intel, kind of a lengthy trading range on the weekly chart, but it does have a daily downtrend. So we do keep that in mind. The bigger picture is the weekly chart for longer duration positions and key levels, which would include about 42. But the daily chart can give some shorter term swings from key support or resistance levels in the direction of the trend. And then UPS, also a breakdown at new lows, and others sorted by, and we'll look at Chipotle. That's a stock that peaked just about 2,000. And that's a stock that we call it at TheoTrade, the overpriced burrito, or have called it that. And it is making new lows, despite having been almost $2,000 per share in the later part of 2021. That is a retail restaurant company. And it is making new lows right there with many other stocks that are joining. There's Walgreens, there is Corning, and other names that you may be familiar. Expedia, United Rentals, VeriSign, Best Buy, NetApp, and many other restaurants, retail names as well. So as we conclude the video, we're watching the market at these support levels with the potential to fall even lower and breaking support levels, and these tech stocks could be on the leading edge of that downside activity. But crude oil does continue to outperform, and that does continue to give a little bit of a lead to some of the stocks in the energy or sector related to oil or oil services. And crude does stay strong. Again, Energy XLE stays strong. Relatively speaking, stocks like Chevron and Exxon will be leadership in the market, and they'll track similar to crude oil. Other stocks will track gold, and of course GLD is a tradable ETF. That's right back in the trading range after peaking at just above 2,000 and 2,050 per ounce. And finally, The bond market continues to get a bounce as stocks are going more toward risk off. Risk off means protection, selling, liquidating, and rotating capital a little bit into the bond market. So that's something to watch as we finish with Treasury, 10-year Treasury yields into that 3% level, just snuck above it, but is currently trading beneath that critical index level. 30 represents 3% on the TNX. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May the 19th, 2022.